Hey everyone, it is Wednesday, the 21st of October 2009. The market closed. We had a pretty nasty reversal intraday here. Looking at the daily time frame just to start out, obviously it hasn't really done any damage at all to the longer term trend, which still is intact, but it does give us reason for concern when you see it sell off on such strong volume, especially after being positive earlier in the day. So let's take a look at the intraday action. You can see that we did do some intraday damage here. So we had the this pattern of higher highs and higher lows that hadn't been intact. We tested the 110 area and went through it today, but this afternoon we had a very quick and nasty sell-off here. So hopefully you were looking at Twitter as I was mentioning the advanced decline line was starting to get weak, and it was time to move those stops up. That was basically around this area right here. It did take a little while, but then there were some catalysts out there that got it moving with a bank downgrade. People are wondering if this sell-off is related to this Galleon hedge fund unwinding, and maybe it is, but it's real selling. Regardless of what the catalyst or what the news is, you have to look at the most important thing, which is price. And price is saying people wanted to get out of this thing in a big hurry today, and that's what they did do. So we're down just above this important level that we've been watching, the 108 level. Here's what I think would be an ideal scenario tomorrow would be maybe we open with a slight little bit of strength, then we sell off down through that 108 level, perhaps down towards 107.70 or so. Then we start to rally up for a couple days and see if we can find some resistance near this prior support here at 108.70, and then perhaps a more of a sell-off begins to develop from that level. But right now, it came down so hard so quick that you can't look at this thing and decide to sell short. The best thing to do was to get out of your positions, as the market told us that was the proper thing to do, via stops, and hopefully you'd seen on Capstone as well that I suggested just getting out of that thing, basically at $1.43, and then I said, you know what, let's just get out of the balance of it here as well, and that tweet came at 142. So Capstone Turbine, it looked like a good trade, but right now we're out with basically break even, and that's a strong defense. If you play a strong defense in this market, I said later in the day on Twitter that these sell-offs aren't going to really matter that much if you as long as you're paying attention and you know that you see what's developing, you have your stops in place. That's just part of the market action. This is not unusual. It is a large sell-off from an intraday time frame. Maybe over the next couple weeks we're going to head down towards 104. That would, still even 104. It's a nice drop from here, but it's not damaging to the overall strength of this market. That's about where we have that 50-day moving average as well. So reason for concern, but not nothing structural uh, in terms of real damage. So if we continue to sell off tomorrow, look for this gap level to close, and maybe we'll find some support near that 107.65 level, and then you're just going to want to look at these prior consolidation areas, 106.50 as well. As far as resistance goes, we would expect that this area right in here, 108.80, would be the area where we would have encountered some selling on a bounce. The Nasdaq was down 8 pennies today, but the bigger story here was the magnitude of the intraday reversal that we had come down so hard so quick. We are right on that 5-day moving average on the Nasdaq. We're also still holding this trend line, and we do still have the higher highs and higher lows in here. So 43 is going to be an important area for this market tomorrow. Ideally, I'd like to see it maybe come down and touch this trend line, come back up, see that 5-day moving average tested and hold as resistance, and then we get a little bit more sell-off over the coming days. But when the market sells off this quick, it kind of needs to kind of capture its breath. This morning on the Chartly chart, excuse me, on the homepage, actually, I had said, is this a case of buy the rumor, sell the news? That we have to be careful that the market rallied on bad news, and now that we're getting good news, this is a classic, climb the wall of worry, and then when it becomes obvious to Main Street that a lot of times that's where that's where we get these turning points. Again, it's not damaged the uptrend whatsoever. We have one candle here that people call a spinning top or something like that. But again, the intraday action is more telling than that. And when the Nasdaq broke here, obviously it broke real hard. That just shows the level of nervousness in this market. Nervousness because we've got the pays are cutting pay by 90%, and people are wondering if socialism is here and what more government regulation is there. You see a hedge fund blowing up, and people begin to wonder: are they going to be liquidating their positions? Is there going to be more regulation over the markets that tries to prevent this? And trader tax, and there's a lot of things out there that people are nervous about. And when the market has had a run as far as it's come in such a short period of time, it's natural to have high anxiety and quicker, more emotional type sell-offs. But the longer term damage, there is a lack of longer term damage as this trend is still intact. It doesn't mean it can't turn out that 3 months from now we'll be down at 35 saying that was the top of that move. We very may well be, but that's why we have to, just manage risk and take it as it comes rather than imposing our beliefs and trying to predict each and every turn. Just anticipate what are the key levels and where do we want to get involved, where do we want to stand aside, and where do we protect ourselves. That is our stops. The Russell's been having a tough time, as we know, with this 6250 level. This has been the relative underperformer lately, as it's been unable to get past that level. We'd seen, yesterday that we got down to the 61 level. Today we had a real nice rally. Looking like this whole thing was going to recover, get everything back. It came down to that two. It's actually the 2-day volume weighted average price where this thing really cracked. Let's take a look at the Nasdaq and the S&P, and it was basically the 1 day there. But this Russell 2000 has been the weaker market, as we've been noting, and now that we're down through this level as well, perhaps we get a little bit more sell-off down towards 60. We get a bounce, and then we start to see the pattern of lower highs and lower lows continue, because now we do have that. We have a lower high, we have this low, and we have a lower low. So we have a downtrend intact on the intermediate term time frame. It's gotten deeply oversold on a very short term basis, similar to this type of move, similar to this type of move here. So we need to stand aside, basically. I think you can't really sell short after these big moves down, because they're typically going to bleed off either with a reversal. And to me, you've got to be really looking at a 1 minute chart to try and capture a reversal like this tomorrow. So tomorrow is going to be a very good day to be mostly in observation mode, for the most part. I'm going to look at a bunch of stocks tonight and try to look for good setups, but I'm also going to be super selective and maybe put more ideas on the watch list than normal, but kind of back off the official ideas until we get a better sense of what this market wants to do here, because it's been jolted today, and we have to see how it settles in and handles that. The semiconductors, as we know, have been weak since Intel reported earnings last week. We're in the middle of this bigger range. We're down to the 50-day moving average, and this is the level that we've been observing: 25.45, 25.50. This is the level of greater importance. We do have the lower high. We did penetrate briefly a lower low. Now maybe another scenario is bounce up, find some resistance at that 5-day moving average, and then the semiconductors roll back down towards this 24.20 level or so. But realistically, we've come a long ways. We don't have to necessarily give this all up, all these gains in these markets. It's not clear to sell short. You want to be short the stocks that are in downtrends, stocks like Jack today, and I covered early, and it was kind of a stupid thing to cover, because this is a significant breakdown here. It's we haven't seen these levels since back in here, and we've got a lot of people trapped. So I didn't do the best job managing the trade, I don't think. But hopefully some of you guys are involved. But I did tweet when I got involved in it uh, as far as the entry and the exit. So we are now also short CPRT right at the end of the day. It did come down quick, but we're short under $33 a share. Um, in fact, let me just cover that right now. We've got our stop at 33.35. I'm going to raise that actually to 33.45. I'm going to go the other way. I'm not going to lower the stop right now, but this high here is 44 cents. Let's just put it at let's put our stop at 33.46 for tomorrow. And if you don't like that stop, by all means, set the stop in a different spot. That's the way I want you guys to use look at these ideas. But Copart does look like it should be able to continue weak. Back to the semiconductors, again, it's nothing says that we're going to give this all up or that we have to. There's no playbook. Markets can correct either price wise or time wise, and maybe this market can digest these gains for a bit. Financials, this is another reason that we've been concerned about the market. Semiconductors and financials. Typically, the semiconductors lead the Nasdaq, and the financials will lead the S&P 500. So we've been observant of that. We've been noting that this 1540 level had been violated late last week. The market could not get back above that level, and that the 5-day moving average has been acting as resistance. I had said that the market was basically range bound here between 1510 and 1540. Well, it broke that range, and now we're in an intermediate term downtrend. We have lower highs, and now we have lower lows. We'll now look for this 1510 level to be an area where we would expect to find some resistance on any near-term rallies. The daily time frame still bullish, but obviously, for short-term traders, this is good information. But we also want to be aware that this is what pays us right in here. When you see it breaking down, I did see some people who are subscribers getting into FAZ rather, the triple long, triple short, and the FAZ went from basically 1875 to 20 and a quarter. So I mean, we had a $1.50 rally here, about 7% rally in those last five candles there. So the last hour or so. When you're looking at these markets, I'm not. I sometimes trade these triples, and maybe the inverses are going to start to be good again. But I usually don't tweet those trades because I don't think they're appropriate for most people. You really have to have your finger on the trigger. You can't set stops. You have to be sitting there in observation mode, really watching tick by tick and peeling pieces off as it moves in your favor and that sort of thing. But the financials are showing vulnerability here. We had we've got last week we had what's her name downgrade Goldman Sachs. Her name will come to me in a minute, but she downgraded Goldman Sachs. The analyst who gets all the attention. I don't know, blonde lady. Anyways, she does a good job, and she downgraded them last week. We had further selling in Goldman today, and maybe Goldman's headed back for another test of the 50-day moving average. Like any form of support, the more times it's tested, the more likely it is to fail. But the direction of the 50-day moving average is still higher, so I don't think it means reversal for Goldman or for these markets in general. It's just a near-term jolt. We're going to have to see. We need more evidence to see how the market does handle it. Let's see. So we're out of Capstone. We also got stopped out of CECO, and in CECO, the thing in here was that what we were looking for. Let me get the pivots on there. What we were looking for this morning did occur. We were looking for a pullback down towards the pivot at we said the pivot was 25.26. So we wanted to see it pull back to at least 25.30 and then buy strength above 25.45. So if you look at the 1 minute time frame, and we can see that it got down to a low of about $25.23, and we bounced through that 25.45, and then I said that we wanted to basically, because that's when it would have momentum, that we wanted to buy at 25.45, but then set our stop at $25.30. So it was a small loss, and it was we were in it for most of the day, but the fact is it broke down after being strong, and now there's just you've got to move to the sidelines. It looked like it was breaking out. It looked good. It made new highs in here. We didn't really lose much of anything in there, about six or rather 21 cents. But a loss is a loss, and losses suck. So hopefully you guys had seen that I was talking up BQI, and BQI had a good day today. But that's why we have watch lists as well. Copart we're short. Dry ships we also get stopped out of. Dry ships. Someone emailed me about right here today and said, "Are you getting tired of the action in dry ships?" And I say, "I am. It's it can it bothers me that it hasn't been able to get back above daily VWAP, but we have a pretty tight stop. When I tighten the stops, a lot of times we get stopped out prematurely. So I wanted to leave the stop where it is, but I encouraged him, do what's right for you. Do what's comfortable for you. Our stop was at $7.18. We were in at $7.40, so we did take a loss of 22 cents in dry ships. And right now, I think that's the right thing. This market is going to be volatile. I think the next 2 days, and we're going to really have to kind of go in slow motion. Make sure you're not forcing trades. We need to, again, just get more evidence from the market and see it stabilize a little bit here, and let us know what's probably, what's most likely to occur next with this market.